Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure ratio market breadth summary chart for June 7th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.97 to 0.83, declining further into bearish territory. The total count of securities in bullish or bearish patterns rose fractionally to 3,078. The count of bearish stocks increased 7%, while the count of stocks in bullish patterns decreased 8%. The Pirls P&F market breadth summary chart shows us a market now 2 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Register. Through following the prompts, you will find a coupon for a free 2-week trial subscription. The well-known market breadth summary chart, the Nasdaq McClellan Summation Index, fell 1 point for the 9th decline in 18 weeks. At a negative 31.77 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode. Momentum. Last week, the CCI 20 daily declined following trade simulation exit signal noted in last week's commentary. The CCI 20 daily is now at 1.84 within the range for a zero-line reject long entry should the CCI 20 increase early this coming week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 46 weeks ago, while the daily CCI 20 began a Woody's uptrend 7 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 102.41 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Bullish, semis, and brokers continue in the top 5, with brokers now leading it. KBW, bank, and networkers have entered the top 5. Gold and silver continues in the bottom 5. Bearish, REITs have entered the top 5. Oil and oil services have left the bottom 5. Focus this week from www.goldcore.com. Gold at $64,000. Bloomberg's China gold price. Some of the key points are the following. Bloomberg intelligence suggests gold back yuan, see gold at $64,000 per ounce. While Bloomberg give no details as to how they arrive at this figure, Our back-of-envelope calculations would confirm that at its current value relative to the dollar, the yuan would indeed require gold, priced in dollars, to be priced in the tens of thousands of dollars. Chinese gold standard would need a rate 50 times bullion price. Bloomberg conclude that at today's prices, it would be basically impossible for China to fully back its yuan with gold. Indeed, at $1,200 per ounce, it would require over 126,000 tons to back $5 to $4 trillion. As China-U.S. relations deteriorate, gold-backed yuan possible. If China were to even partially back its currency with gold, it would gain further favor across the world as a reliable reserve currency when viewed against the increasingly debased U.S. dollar. In order to maintain some semblance of credibility, the U.S. would likely be forced to follow suit. U.S. and China war of words continues to escalate. At the end of last month, a Chinese state-controlled newspaper stated that if the U.S. continued to interfere with its activities in the South China Sea, war was, quote, inevitable, end quote. China are clearly not intimidated by the prospect of war with the U.S. China rejects U.S. hegemony in Southeast Asia. The message was subtle but quite clear. China views the U.S. as a peripheral nation in Southeast Asian affairs, whereas Russia is at the center. Currency war to escalate. There will be a tipping point where the advantage to be gained by badly impacting the dollar and positioning the yuan as new reserve currency will be greater than the disadvantage suffered by a collapse in the value of the dollar. The tipping point is closer than many believe. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary Bull-Bear P&F Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you're looking forward to a great week coming up, and wishing you true success.